And even though there are a lot of technical indicators, price action remains the most popular way of trading among the new and veteran traders. And trading price action without any analysis is a recipe for disaster, but there's a simple solution to fix this. So if you want to be a successful trader, you need to understand price action. This way you will allow yourself to take a trade you're confident in. So in this video, I will teach you a 4-hour price action trading strategy I personally use, and I hope after watching this video, you will be one more step closer to becoming a profitable trader. So let's dive right into the strategy rules, and as I previously said, I trade this strategy primarily on the 4-hour chart, but of course, I perform all of my overall price action analysis on the monthly, weekly, and daily charts. And basically, what we are aiming for is to take advantage of big price swings on the daily chart that come from areas of high sensitivity that keep pushing the price down, making lower lows if you want to sell and higher highs if we want to buy in uptrending markets. So with that in mind, this is what we are aiming for, and there are two very crucial rules you must understand in order to take advantage of this price action strategy, and those two rules are trend and structure. And of course, if you are a new or struggling trader, you may find it challenging to understand the market's direction and structure. However, that's why I'm here, so let me show you a set of rules along with an example of an uptrend and a downtrend market structure that helped me to understand those differences and identify strong trading opportunities. So the first rule of this strategy is to identify a trend on a higher time frame, such as the daily. And in order to make that extremely easy, I love to use exponential moving average of 50. The reason we need that is because it's going to be part of the rules that will help us to identify the areas of support and resistance and a potential trading opportunity. So let's talk about the uptrending market and its structure. To be more exact, essentially what we are looking for with this strategy is for the price to push and create a new high, pull back to the previous high, push again towards an upside and make a new high, and so on, because this will indicate that we are in an uptrending market. And of course, it's always easier said than done, but that's why I find 50 exponential moving average to be such a useful tool. So this is an example of a bullish market on the NZD-JPY currency pair on the daily time frame. As we can see, the first higher high was created above the 50 exponential moving average. And of course, in order for me to start looking for any potential entry opportunity on the 4-hour time frame, we must break this obstacle over here, which is our resistance zone, and wait for the price to pull back. And to be honest, in most cases, after a new high is created, there is always a pullback towards the previous area of a resistance, or sometimes the price can even start consolidating before continuing its move up. So let's switch onto the 4-hour time frame, and I will explain to you what I have in mind by waiting for a pullback to enter the trade. So once I see that the price pull back towards the area of a previous sensitivity, I know that not only are we in an uptrend, but we also broke past a resistance that now become a support, and this is where we can start looking for a possible buy trade. So in this scenario, this would be an excellent entry point, and let me explain why. First of all, I do have my own trading routine and plan that I love to follow, and it helps me to be a more disciplined trader, so I hope you have one too. But basically, one of the rules I have is that I like, and I'm only allowed to enter my trades on a bullish engulfing candlestick closure above the 50 exponential moving average, simply because it's a strong candlestick formation that indicates market bullishness. So the second reason why this would be an excellent entry point is just because we have two supports, which means that if you find the area of support, it signifies that sellers attempted but failed to break it. And the second support is our moving average of 50. This exponential moving average tends to move in the same direction as price, which gives you an extra support when the price goes up. So the third reason for this trade entry is that there was a previous daily high, right? And in order for the price to make a new high, they will have to move all the way up to retest the previous daily high before either turning around or continuing to move up as they make a new high. And this is where we can actually profit from. So I'm here explaining to you guys how to trade price action. And of course, I will do my job as much as I can. However, your responsibility As a trader, especially if you're looking to become a profitable one, you must perform some sort of backtesting before any strategy I do share online. And if you haven't done this yet, hold on, because this is where Trader Edge can help you. So if you're still spending 10 hours per week on backtesting alone, let me tell you that using Trader Edge will take you only 3 hours. Not 10, but 3 hours only. So in order to avoid any mess, Trader Edge has a strategy library. This is where you save all of your backtesting data. And there you may organize the strategies by the category, color code it, and even name it for easier reference. And as I mentioned, if you're really looking to become a profitable trader, they also have their profit and loss calendar. The calendar allows you to make notes on each trading day, allowing you to clearly see what's working and what's not. And you can even write down your trading emotions for the day, as well as any trading mistakes that may have impacted your total result. Trader Edge has a 7-day free trial, so there's literally no risk, so I will leave a link in my description box down below to check it out. So for all of my trades, I use a stop loss of 80 pips and an overall take profit target of 160. This is because I am a swing trader and it's more convenient for me to have a bigger stop loss and manage my risk. So let me quickly set that up and let's play a replay tool to see how the trade ended up going based on the simple price action strategy. So in the beginning of this video, I have mentioned to you that the price might run in a consolidation period before breaking it, and since this has already taken place over here, as we can see, the support has never been broken below, but it has always bounced of it. So this indicates that even though there was a consolidation in which basically buyers and sellers were fighting, the bulls were powerful enough to push the price up, break above the previous high, and hit our take profit goal. Of course, in addition to that, the moving support provided by the 50 exponential moving average has done a wonderful job by accompanying the price all the way up, because we were able to observe these numerous rejections of the 50 moving average. But you know, the market doesn't always move up, so here are the rules for you to find a powerful trading opportunity in a bearish market. So here is a GBP USD currency pair, and if you have been following the market, you will notice that the great British pound hasn't been this low since 1986. So the monthly, weekly, and daily time frames has been trending down, and the EMA 50 has been trending above the price religiously. And if you remember how I told you about EMA 50 standing for a moving support or resistance, here is a great example of how every time the price touched EMA 50, it shot towards the downside, never really broke, and closed above it. So in this scenario, we would be looking for a lower lows and lower highs to be created. This means that the formation of the consecutive lower lows and lower highs in the price of the currency pair in a specific time frame is referred to as a bearish trend. So technically, once we see that new lower high on the daily time frame, we want for the price to start heading towards the previous low, because if that will go other way around, that's not gonna be a valid entry, not at all. This means we should open a 4-hour time frame and start looking for a breakthrough to that support that daily time frame has. So now again, this is a great example on the GBP USD 4-hour chart. We can see that the price broke past the support, consolidated for some time, and this is where I would wait. I would just sit, sip a coffee, and wait before I would even consider entering a trade, because ideally you want to see a break through the support of that consolidation, push, exhaustion, and then consider to enter. So I use a risk-reward ratio of 1 to 2. The EMA is trending above and resistance is also covering our stop loss, which is a good sign that if the bulls try to break it, we have a stronger barrier to go through. And my entry would be just over here because of that consolidation break and a bearish engulfing candlestick closure. So guys, this is the actual trade that I sent to my VIP members on the 30th of August, and I wanted to share that and kind of prove in my words that this strategy could be insanely profitable if you follow the rules and the right risk management approach. So before you leave, if you enjoyed this video, smash like and subscribe because it's free, and don't forget to watch this video, and I will see you in the next one. Bye!